Low deposit home loans these days are the norm because house prices have gone up so much in the last few decades. It has become much harder for first home buyers to save that standard 20% deposit. Over that time, the system has adjusted to support first home buyers. There is one big problem though. There's so much confusion. So in this video, we're going to talk about 5 ways you can get in the market right now with a 5% deposit or less. If you don't know me, my name is Will Bell. I run my own mortgage brokerage, and for the last 15 years, I've made it my mission to help people make it financially. That includes helping client after client get into their first home, helping them sort through the confusion and stress involved with buying your first home. If this content is relevant to you, then give me a follow and look through the other videos I've got for first home buyers. Okay guys, let's get going on all of these different ways that you can get into your first home with a low deposit. We're going to move through these quick because I've identified 6 different ways you can do this. So let's get into it. The first one is the home guarantee scheme. Now, the home guarantee scheme is actually divided into 3 main different schemes. I'm going to talk about the first one mostly. The second one is similar, and the third one is slightly different as well. The first home guarantee is the first one. It's a 5% deposit scheme. So basically what that means is that all you need is 5% of the purchase price to get into the market. What you've got to watch out for here is potential stamp duty. Depending on what state you're in, you'll get free stamp duty up to a certain purchase price, and then above that you'll have to pay for stamp duty. The second one is the regional home guarantee. It works similar to the first home guarantee. The third one is the single family guarantee. This is meant for single parent families. Obviously a bit tougher with a single parent family. They let you get in the market off a 2% deposit and not a 5% deposit. Note number 1 with the home guarantee scheme, apart from the single family one, is that you can co-own with a mate or a relative. So that 5% that you need, maybe you don't even have 5%. Maybe you've got 2% and your mate's got 3%. You guys can get together, get access to the scheme as mates, and own your own home together. I've seen this happen before. It's great if you're paying rent or something like that, and it's just so hard to scratch that extra little bit of money you need to get into the market right now. The other thing people aren't aware of in this is maybe you got divorced ages ago or whatever, you helped your parents out or helped family out, and you own property more than 10 years ago, you still qualify for this scheme. So even though it's a first home guarantee, for example, you still qualify. They still count you as a first home buyer for this scheme. The second thing you can do is a little bit controversial, I think, is you can get a personal loan to fund your deposit. Pretty straightforward. There are banks, home loan lenders that will allow this. What the caveat is here is that you need to have a reasonably high degree of income, or you need to be going for a very small mortgage. The reason for that is personal loans are usually due over 5 or 7 years, so their repayments are a lot higher. Well, if your personal loan repayment is a lot higher, it means that's less money you can spend on your mortgage, which is going to reduce the purchasing price of the mortgage. Alternatively, you could do a family loan or a gift for a family, and then a smart little thing I've seen people do is pay them back with the first homeowners grant. So the first homeowners grant is a grant, depending on which state you live in, depends on what it is. In some places it's nothing. Let's say in Queensland where they're giving people 30 grand for the first homeowners grant. That first homeowners grant gets paid when you're building the new house, so you don't have it up front. Some people are borrowing that money from family or getting it as a gift from their family and then giving them that money back later on when their first homeowner grant gets paid. So number 4 I've put as special lender. These are sort of alternative lenders that you're not going to find this solution at a mainstream bank. So you're not going to go to CBA and they're going to offer you something like this. So for example, right now we've got a lender that will allow you to get in the market off, I think it's a 2.5% deposit. And what that basically means is it's kind of like the personal loan part, except they're giving you a larger loan, but the loan term is much larger for that personal loan. It's a 15-year loan. They take a second mortgage out on the property you end up buying. But the reason why this works is because that personal loan, even though it's larger, it's spread out over 15 years. So it makes the monthly repayments really small on it. So it doesn't reduce your overall purchasing power that much. The 5th way you can get in the market is a co-ownership scheme. The most common one that is going around at the moment, or is about to be going around at the moment, is the Help to Buy scheme, which is the federal government one that's about to be announced. This is where you only need a 2% deposit and the government will pitch in up to 40% of the purchase price of that home. Why does that benefit you? Well, or the borrower? Well, that means they can get access to a property they otherwise wouldn't. If they can only borrow 500, the purchase price goes up to about 800 and you're only paying the loan amount on the 500 grand. The government owns the rest of it, but you don't have to pay them back if you don't want to. This scheme has had a lot of interest. It's not actually been announced yet, although from all indications it's going to come in sometime this year, 2025. At the moment, I have a Help to Buy waitlist. It's a service where we get you as ready as possible, so you're front running the market. The risk is with this scheme, there's only 10,000 spots available nationwide. And I can tell you for the last couple of months, I've been speaking to people every day about getting on the wait list. I can tell you in places like Queensland and Perth, where property markets have moved a lot, people are desperate, I don't use that word lightly, desperate to get onto this scheme because they fear that property prices are going to keep going up and they're going to be priced out of the market. And therefore, they need to do something right away. So a lot of people are seeing this co-ownership scheme, this Help to Buy scheme, as another way to get into the market. There are other schemes at state levels. New South Wales and Victoria have stopped theirs. They're going to adopt the Help to Buy scheme. Queensland are bringing one out soon, one to go along with the Help to Buy scheme. It's called Booster Buy. There's South Australia and Western Australia that have their own versions of it as well. Those ones are not really very good because their interest rates are sky high, so it really does push down the borrowing power on those schemes. However, they are there and they are available. These co-ownership schemes are a real game changer for first home buyers. Ultimately, they're probably going to push the market up. If you're giving a whole bunch of people in the market an extra kind of, if you're pitching in 30% or 40% of the property price, that means they've got a lot more purchasing power. So the people that get on this scheme at the start can go into the market and just outbid everyone if there's the house they want. So I think a lot of people see this writing on the wall that these first home buyer incentives, they actually do push house prices up. The last way you can get into the market, this is off a 0% deposit. That's right, a 0% deposit. I've literally helped people with no savings do this. It's not something that gets done lightly, but how it works is you use what's called a family guarantor. So it's a family member, usually it's a parent, and what they do is they own a property, they say, look, I'm willing to support a son or daughter or whatever into the market. So the bank can use my property as co-security along with the property that they buy, and that's held as collateral. So what that means is if you buy a house for 500 grand and you need 500 grand plus costs to borrow it, well, that's not very secure for the lender. In fact, if you just don't pay that mortgage, bills are going to add up, the interest is going to add up. It's really risky for the lender because if the property goes down, they're losing money. So what they do to de-risk this situation and make this deal, this loan, palatable for them is they take more security in the form of that family guarantor, and that keeps them happy because they know if you do the wrong thing and then they lose money, they're going to come for your parents or whoever the guarantor is for whatever money they've lost. So that's how that works. Family guarantors are a lot more popular now for that reason. There are some lenders that will do other relatives as guarantors. If you're trying to get a friend to go guarantor or something like that, it will not work. Guys, I hope that helps. I really tried to just fang through that really quick. Stick around because this is going to be the lead up to the next couple of videos, which I'm going to go more into about how to secure the finance for your first home. But I thought I would just dedicate a quick short video now into all the schemes because the important thing about the schemes is once you're clear on that and you know what schemes you can get, you can figure out, okay, well, what deposit do I need? And maybe you're ready to go already. Maybe you need to set a bit of a savings plan to do that. Understanding what schemes allows you to understand what deposit you have. It gives you clarity as to where you need to go. And that's the most important thing, I think, for first home buyers is when they come into this process, they've got a lot of confusion, a lot of overwhelm. You know, everyone's a bloody expert you talk to, you know what I mean probably by that. But this gives clarity. This gives some cement. It's like, okay, now I know where to go from here. It's not everything, but it's something to grab onto. And then from there, you can start going through the process. If you want to subscribe to this channel, if this content is relevant, I'm hoping it is if you've watched to the end, please subscribe because there'll be a few more videos coming out on the process of buying your first home. Cheers.